Ladies and gentlemen, welcome back to the channel. We have breaking news for AMC stock investors. Now, this news is pretty interesting. Let me know what you think about it. I think it opens up a door for new possibilities with AMC. Is this going to be something that is revolutionary? Probably not, but I think it could be very interesting and could open the door for something much larger. Okay. Apparently, Zoom rooms have launched at AMC in 8 locations. It says AMC Entertainment's theaters unit and Zoom Video Communications said Thursday that Zoom rooms at AMC is now available in 8 U.S. locations. The company said the strategic collaboration, which was announced in late 2022, will allow businesses and organizations to host Zoom meetings, webinars, and hybrid events in AMC's theaters. It says Zoom rooms at AMC is now available in 8 locations. The company said the strategic collaboration, which was announced in 2022, will blah, 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 allow hybrid events in AMC theaters. The service can be accessed at select AMC theaters in Atlanta, Chicago, Denver, Kansas City, Los Angeles, New York City, San Jose, and Seattle/Tacoma, they said. So pretty interesting. There's obviously a lot of potential that could come out of that. Is it having a positive impact to AMC stock today? Well, unfortunately not. AMC stock is down about 3.5%, and really it just comes down to the terrible data that we got today. This is really bad. Okay, let's not try to sugarcoat anything here. This is not good for the Fed. Okay, let's refresh this. Trading economics, the calendar, and PPI month over month came in at 0.6%. Now, PPI tends to be pretty closely correlated to PCE, and this was like 2-3 standard deviations higher than economist estimates. The estimate was 0.3%. Nobody was expecting 0.6%. So that's a really bad number. That's showing a lot of companies are feeling some of the inflationary cost in the month of February. Now, you could probably make the argument or conclusion that some of this pressure that companies are feeling as far as inflationary pressures could be due to wages, right? We have seen wages climb at least a little bit. And I think to some degree, we may be experiencing a small wage price spiral. Now, retail sales also for last month were revised down from negative 0.8% to negative 1.1%. So retail sales were a little bit worse last month. And this month, retail sales came in at positive 0.6%. The estimate was 0.8%. So not terrible. It's not bad enough to say the Fed should be cutting rates, sooner. It definitely does not outweigh that PPI number that we've seen. So stocks are largely down today. But I think given this data, given what we actually got, stocks are performing pretty well. I feel like stocks should be down more based on what we've seen today. Nonetheless, business inventories came in at 0%. The estimate was 0.2%, so that's a little on the good side, right? You don't want to see inventories high. That can be a drag on GDP. But PPI month over month coming in that hot, it's a little bit of a problem for the Fed. Now, the Fed's going to be next week. And we're also going to get a summary of economic projections. So the dot plot. The dot plot is likely to be more hawkish now that all of this inflationary data has been hotter than expected, right? Every single data report in regards to inflation has been hotter than expected. PCE, PPI, CPI, literally everything, right? So that's not good. There's a 2% chance the Fed will cut rates in March. Let's be honest, that's not going to happen. If the Fed were to cut rates in March, the markets would sell off big time. That would be pretty much a black swan event at this point. So I'm not expecting that. For May, there's a 91.4% chance of a continued pause, 8.5% chance of a rate cut. For June, there's 54.6% chance of a cut and 40.5% chance of a continued pause. So June, you're still pricing in a rate cut, but we can see the probability did fall. So yesterday, the probability of a rate cut in June was 58.6%. Today, it's 54.6%. And I think this is where the problem will be. I think the summary of economic projections may only forecast, one rate cut, maybe no rate cuts in 2024. So that's a little problematic. As well as that, I think you only really have until July to get a rate cut. And why that is because the Fed wants to remain independent from the government, right? That's why Powell really doesn't comment on policymakers, on senators, on the House, on people that set his policy, because, that's just not what Powell wants. Powell wants to stay independent from the government. If you're heading into an election and you're cutting rates right before the election, that's seen as very political, to help one side or another. And that's not what Powell wants, because then after the election, it's going to be like, well, should the Fed be independent anymore if they're going to be politically motivated, right? Even though it may not be politically motivated, the Fed's probably not going to cut rates after July. So July is the last time for the Fed to cut rates. And, it's not technically the last time the Fed can cut rates. The last time the Fed can cut rates before the election is September, but they're probably not going to cut rates in September. July is really the last month. So June and July are a main focus. You're almost pricing out the rate cut in June, and then that really sets you up for July. You may only get one rate cut in 2024, whereas the average consensus view is still 2.5 to 3 rate cuts in 2024. I guess the day after the election on November 7th, you could probably get a rate cut as well, which this period of time is going to be so volatile around the election and the November 7th Fed meeting. But I think the markets are really set up for a little bit of a disaster coming next week with the Fed's summary of economic projections. We know that the last projection we had, the Fed was pricing in about 3 rate cuts in 2024. That's before 2024 started, right? This summary of economic projections came out on December 13th. Ever since 2024 started, all we've gotten is hotter than expected inflation reports. So that's for sure going to fall to at least 2 rate cuts. In my opinion, the Fed's probably going to signal for 1 rate cut. And I don't think the Fed really wants to back themselves into a corner here to need to be in a position to cut rates, right? I think the Fed wants to remain data dependent. If inflation continues to rise, they don't want to put themselves in a corner and need to raise rates, because that's what the Fed has been projecting. So I think we are set up for a little bit of a disaster. Now, if you actually look at TLT today, I think that's giving you a much more accurate view on how this data actually was today. TLT is down 1.37%. That means people are selling TLT and bond yields are rising. So this really shows you today's data was a lot worse than what stocks are actually giving it credit for. Here on the day today as well, you have NVIDIA, really the golden goose of this market, selling off about 3.5%. Ever since this high that you hit at $974 per share on March 8th, NVIDIA's kind of been trading sideways at best. And unfortunately, ever since March 8th or so, I think that really killed the momentum for NVIDIA. I think it's going to be pretty hard to overtake $974 per share, where you got this big downwards candle. And it seems like we're being proven that quite a few times now. Now, NVIDIA coming on Monday is going to have a major event, their GTC conference. It's the first live conference in like 5 years or something along those lines. NVIDIA usually rallies after the conference, but I think there's a lot of high expectations for what's going to be announced, even though the stock's kind of selling off today. Who knows what's in store for tomorrow? It would not surprise me to see a sell-off coming on Monday in NVIDIA, in some of your other AI stocks. And then obviously on Wednesday, you're going to get the Fed, and that's also going to be problematic. With that being said, AMC stock is down about 3.24% today. Again, you're just sitting right at your 50-day moving average, getting rejected there basically every single day. That level is at $4.47 per share. So for whatever reason next week, whether it's the Fed, NVIDIA, who knows, if something gets our markets going to the upside, that's going to be great. That could push AMC above that 50-day moving average. Then you open yourself up for potentially like 35% upside from the 50-day moving average to the 100-day moving average. And that could get exciting when AMC does break above that 50-day moving average. I'm expecting it will happen at some point here in the next couple of weeks, but we keep getting rejected around that level. With that being said, let's go over your data here today for AMC stock. Let's start with the option activity from hedge funds and institutions, and just one trade totaling $1.9 million, which is a big trade for AMC, with a positive order value of 0%. This is a January 16th, 2026 $7 put for $1.9 million with a break even of roughly $3.20 per share or so, considering the premium was $3.80. So that's kind of expecting AMC to fall at least $1 from here. Not exactly the most bullish trade, and $1.9 million trade in AMC, that's quite a large amount for AMC standards. Now, short interest is falling a little bit today, which take it for what you will. I think the short interest really doesn't fall with AMC. I think the numbers in which we get reported can fluctuate, but I don't think shorts are in any kind of rush to cover on short positions at all. I don't think they have been for a long time. You do have 12.78% short interest of free float, $146.1 million currently in short positions. Days to cover 2.12, 33.51 million shares that are currently sold short. Shares out on loan, 43.46 million. Cost to borrow, 1.09%. Utilization of 58.88%. And a short score of 66.8 out of 100. So, pretty much the same numbers here. Nothing's changing, albeit on a day-by-day basis. Still a lot better than where it used to be. Cost to borrow max at about 1.9% today as well. To StockTwit's sentiment in AMC today is neutral at 50. Yesterday was at 49, so a little bit better, but still neutral. Message volume at 49 today. Yesterday was at 48, and the participation ratio is at 54. And if I remember correctly, the participation ratio yesterday was around 55. So nothing's really changing here today. A little bit more bullish than, I guess, what you've seen before previously, but still just overall kind of neutral sentiment in AMC stock. Remember, this week you have trillions of dollars worth of options expiring. A lot of those probably going to expire worthless, and that is on the broader markets. Now with AMC stock, you have hundreds of thousands of options that are likely going to expire worthless on both sides. But if we do get some volatility here, even coming throughout the rest of the day today or even tomorrow to the upside or to the downside in AMC, that could definitely start to move things around quite a bit and definitely start to give some volatility in our markets. We do have some earnings today in after hours. We do have Adobe, Blink, Ulta Beauty, PagerDuty, Smartsheet, Rigidity, Copine, Wheaton, Prescia, and Vaxart that will be reporting earnings. Obviously, Adobe, Ulta Beauty, Blink, those are your larger names. PagerDuty to a smaller extent. Adobe could actually move the markets quite a bit because it's deemed as kind of that AI trade, larger market cap company. So definitely one to be watching. As far as the specific number of options for AMC this week, you got about 12,000 calls currently in the money. Out the money calls at about 271,000. In the money puts at about 30,000. Out the money puts at 110,000. So decent amount, that's for sure, of option activity. You'll probably see quite a bit of this roll over to next week's expiration as well, but this is definitely the largest expiration that we're going to have for a while in AMC. And believe it or not, typically when we have large expirations for AMC, you really don't tend to move all too much. And I think that's just because there's a lot of positioning on both sides of the options chain, something to consider. Now, the percent of stocks above their 50-day moving average falling quite a bit today. Today's a rough day out there for your average stock. Now 51.97% of stocks are above their 50-day moving average. Basically a coin toss. 4.34% of stocks are falling under their 50-day moving average today. So definitely not the greatest out there, that's for sure. If you take a look at 10-year treasury yields, again with TLT falling so much, that's having an upward pressure on yields today. Yields up about 9.5 basis points. So forget what equities are doing with the NASDAQ and the S&P down about 1/4% to judge really if this is good or bad data today with PPI, with retail sales, how the markets are actually taking it. You probably should look at the bond market. The bond market is less influenced by AI and other factors that may be influencing equity markets. If you look at the bond market is unanimously voting. Today was negative. Today was really bad according to the bond market. So definitely something to consider and remember. I mean, bonds tend to be a more accurate indicator of, good or bad days, good or bad data, right? How investors are feeling. And definitely with the sell-off in bonds, not feeling all too great today. So let me know what you think about this information down below in the comment section. AMC's RSI at 42.77. Pretty neutral, but definitely on the oversold side. And the MACD, well, the yellow line just went under the blue line, so that's not exactly great for the MACD or for momentum in the short term. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.